Well, good morning, everyone. Welcome to our Wednesday morning trading session. My name is Eric Senft. Thank you for joining us. I'm going to be your host here for the next little while. The market's just opened up, and I should do a real quick overview here for those of you new to the trading room this morning. What you're looking at here is the Diversified trading system. And it's diversified because we're looking at the market from three different points of view. Here on the top left, we have the Hawk Micro Scalper. Top right, we have the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This one is called the Raptor. And the Raptor actually incorporates elements of the other three birds all into one trading chart. All the signals on the chart develop the same way. In other words, we're going to be seeing a warning dot when the signal starts to print. So we get a warning dot. Then when the signal is complete, we get a triangle and a hash mark. And that tells us it's decision time. And then we decide whether or not the trade meets our criteria, and we respond accordingly. And like I said, they all work the same way. So we're all looking for warning dots. We're also going to get audio alerts when we get those warning dots. And that enables us to watch several markets at the same time. The chart you're looking at here, this is the NASDAQ. I'm also following gold and crude oil, but I would be happy to take a look at any market which is of interest to you. I know there's probably a couple E-mini traders in the group. Maybe a currency or two, whatever you would like to see. All right, so your questions are more than welcome. This is a demonstration room, so I'm going to try to hopefully point out a decent trade or two, and if not, well, we'll just demo the software anyhow. All right, so let's take a look at what's been going on, where we've been, where we might be going. This is on the Raptor, and we'll just scroll through here the overnight. And you can see we had a pretty steady progression right here from the London Open. We had what we call a cloud crossover signal. So our trading band flipped over. And then when it flips over like that, we always anticipate that it's going to provide us with some support. And that's exactly what happened here. We got some support. The market came back with a signal, and just look at that move. That was a fantastic move in the overnight. Problem is, now that's going to look a little bit like an opening gap, right? Because we're opened up here. The market left off yesterday around 40.90, 40.93, something like that. I'm trying to remember. But anyways, this is going to look like a pretty big opening gap to the market. And we'll see whether they're going to try to get into that or not. While we're looking here at the Raptor, I'm going to point out to you the Geiger counter. This is an add-on tool. You can use this with any chart. Doesn't have to be a DTS system. You can use it on your 5-minute charts or on your tick charts or whatever you like. It's essentially a tape reader. So it shows you market flow, order flow, which is very important, especially if you're looking for short-term profits, scalps and whatnot. You can really see the balance of the market. And if you're in a prolonged move like this overnight trade and you're wondering, gee, I wonder if I should get out, it will show you when the market is getting a little bit weaker as well, when the buyers or sellers are starting to take control. So we've got this histogram here, kind of plots out the history of the time and sales. And then we've got this dial. Now this dial gives us the immediate feedback. What I'm looking for when I'm watching the dial is I'm looking for it to pull over hard. See how it pulled over here? And it's holding and it's holding and it's holding. That tells me that the sellers are really starting to chew through some orders. So if I was looking for a buy signal, I may want to consider, maybe waiting for a second push on the entry, or perhaps waiting for other confirmation tools to support the buy signal. Or if I'm already long and I see the sellers pull over and hold and hold and hold, then that tells me it might be time to start to bring in my stops, as there could be a little bit of a reversal. Look at how the histogram here is really starting to tip to the downside. Huge selling going on. And the buyers, well, not really absorbing it for the most part. Now we're seeing some buying pressure coming back. So again, what we're looking for is not so much the dial flipping back and forth, but when it pulls and holds and holds and holds, then that really shows you that the one side or the other is starting to chew through all those orders. All right, so there's the Geiger counter. And again, that's an add-on. You can put this on any chart you want. Right now, we're still kind of range bound here. If we're taking a look at the hawk, you see all these yellow bars through here. This tells us we're in a chop zone. And as such, we're going to be a little bit more selective. And Jose is asking, can we take a look at gold? Absolutely. Here's gold. And gold also here on the hawk, very choppy at the moment. So when you get all these yellow bars printing and they're more or less at the same latitude, that tells you that you're in chop right now. And when you're in a choppy zone, the best thing to do is really just wait for the market to get out of the chop and then come back with a signal. But gold starting to look a little bit more bullish here. We're producing a first micro-macro cross signal. This is one of our high probability signals. Currently, we just have the warning dot. And why not? I'm going to demo this one for you. So I'm going to anticipate the entry is going to be there at 1209.6. I'm going to place my stops down here. And we'll see if we can't get a little short-term scalp off of this first micro-macro cross signal. Now the signal has not developed yet, but I know if this bar finishes near the high, it will produce a first micro-macro cross signal. So the warning dot gives me plenty of time to start to set up a trade, to take a look at what's going on. This tool right here that you saw me use on the right, this is called the Trade Manager. This is an invaluable tool. And I'm not overstating that. This is perhaps the single most important tool you can own as a trader, because the Trade Manager here has this all-important risk component that restricts my risk on the trade. So you see right now I'm risking $220 on the trade, and it's into yellow bars now, so we're not going to take the trade anymore. But had I set it up the same way and say I place my stop here, oh look, I'm risking about the same amount. I'm, rounding errors and whatnot. But it's always going to maintain my risk the same regardless of where I place my stop. See, I know that given my account size, 2%, I can risk about $300 on a trade. So the Trade Manager will always cap my risk at $300. So that enables me actually to place a decent stop on the trade, right? I don't need to strangle the trade fearing that, I'm going to lose too much money. I don't need to put my stops in ultra tight and then end up getting stopped out on a little hiccup. See, the risk amount never changes. What does change is the position size. So at one time I might be trading one contract or 3 or 6 or whatever the case may be, but the risk amount itself never changes. So there's gold on the hawk. They're just kind of flip-flopping a little bit right now. Let's take a look at gold on the Falcon. This is the Falcon Swing Trader. Come on, open up. There we go. The Falcon Swing Trader, we're looking for confluence, similar to the hawk. We've got this trend line here, and we're going to be trading in the same direction of the trend line color. So when it's red, we're looking to sell. When it's green, we're looking to buy. And again, we're looking for confluence. So we're looking for a green signal, green trend line, green filter. So here was a nice trend change signal, what we refer to as a trend change signal. Nice little buy, short little swing to the upside, ran right into the secondary resistance line. These lines that you see here, this is also an add-on. This is not specific to the Falcon or the DTS system. This is the ultimate support and resistance suite. No, they are not pivot points. No, they are not Fibonacci retracements. If they happen to coincide, it's by coincidence, not design. These are much better. And you can see that today, at least looks like since gold's open or North American open, the market has pretty much been contained between the primary resistance, that's this blue line, and the secondary resistance, which is that green line. So we're kind of stuck in that range right now. So a little bit of a trading range going on. I'm not going to get too aggressive and start shorting it. Again, the filter breaking up quite a bit, the trend line breaking up quite a little bit. That's telling us that we're in a little bit of a sideways range here with gold right now. Gold trying to be bullish again, but they do have a little ways to try to go to get bullish. Here's gold now on the Eagle Trend Trader. And same thing, we're all kind of whipping back and forth. You know, here's a move down, there's a move up, here's a move down, here's a move up. Our filter all broken up, although it does look as though they are trying to bounce off of the hard edge of our trading band. Our trading band here gives us our directional bias. So when the band is with the soft edge, this is what we call the soft edge down here. Below the hard edge, we're looking to sell. And when the soft edge is above the hard edge, we're looking to buy. We're looking for buy signals. So here was a nice trend change signal. The market retreats into the hard edge, comes out, good little sell signal. We're always anticipating a signal, especially when the market encounters the hard edge. Those are going to be your higher probability signals. So a little run into the hard edge, a green bar sell, which is a high probability signal. And it floundered a little bit, but it probably didn't find the profit objective there. But it did give you a couple opportunities at least to adjust your stop somewhat. So hopefully if you didn't get break even, you incurred just a small loss. But where we are right now with gold, it's trying. We'll see whether or not it confirms this breakout. See, what I'm looking for is once it breaks outside of this trading range, I'm going to look for it to confirm that breakout. It's what I refer to as a test and a retest. So this is the test part, the breakout part. If the buyers are serious about supporting the breakout, the market will drift down because the seller is going to jump on them sometime through here. And then the buyers are going to come back and they're going to honor this breakout. In which case they're going to come back with yet another buy signal. That's going to be the retest. That's going to be our best opportunity to buy. I know it's tough, choppy markets and all. And believe me, nobody has a shorter attention span than myself, so it's kind of difficult to amuse yourself when the market's not doing anything. Good morning, Jim. Jim shooting some advanced decline numbers our way. 2,400 on the buy, 300 on the sell, but don't forget, folks, we've got a pretty big opening gap this morning, so those overly bullish numbers need a little time to settle in. All right. Jim's looking at doing a cloud-to-cloud short on the YM. So when your clouds on your Raptors start to get overextended, especially like they are up here, this tells you that a market is severely overbought and that a retracement may be in order. And what we always look for before a retracement is we're looking for this what we call a test of the extreme, or a retest of the high or low, whatever the case may be. This would be a retest of the high. There's our failure. Here's our signal right here. This is what we call a soft edge sell. And you can see that had some pretty nice follow through to it. So Jim, I know being more aggressive, he was probably selling from up here already, but good for you, Jim. It looks like I'm sure the YM is copying the NASDAQ. You probably picked up a couple of ticks on that one. All right, well, here on the Hawk, while I was looking at other markets, we had a nice first micro-macro cross. That's the signal right here. This is our highest probability signal on the Hawk. This bad boy right here. And it occurs when the micro line and macro line cross and everything comes into sync. So we've got red bars, red trend line, red filter, and a red signal. Very, very high probability trade. All right, well, we're going to have to wait a few more minutes here. They're kind of flip-flopping a little. Oh, you know what? I know what I'm going to do. Here's a late filter entry signal on the Falcon, which is also a high probability signal. We'll see if it comes back here a little bit, and I can try to simulate the order. There we go. Okay, we'll see whether or not they resume the downtrend. I'm going to try to simulate the order here for you. And what I want to show you is I want to show you the stop strategy. Here on the Trade Manager, we've got 16 different stop strategies to choose from. And they're all customizable. You can see I can change the settings however I want them to be. And these blue dots that you see here, this is how the Trade Manager is going to manage my trade for me. Now I'm going to eliminate the break even and the profit target for a moment. Hopefully this market will continue a little bit lower, and oh, did you see that? The Trade Manager automatically starts to roll the stops. We'll see if this bar finishes lower, we'll get it to roll again. And what that enables you to do is it allows you to actually follow several markets at the same time, because now, you know, I really don't need to be watching this one anymore. Come on, get down there. Where's the next support line? So looking for a move here to 41.17. Yeah, that seems plausible. Sure, why not? That would put it into the gap. So I'm going to use the support and resistance lines here as a profit objective now. So looking forward to trade from the full zone from here down to here. Not very active right now, but just look. I was hoping to demo the trailing feature for you a little bit more here on the Trade Manager. The Trade Manager also allows you to set up to 3 profit objectives, 3 preset profit targets, and you can always have a runner in play also. Because this is just a single, of course, well, there's not much that we can do with it. Oh, Tony, I love your compliments, but really, I'm just another trader. Tony asks, "Good morning, Eric. Realizing that you have years of experience and are a master of the DTS," Tony used air quotes there. "Can you explain how, when you're trading your cash account, how do you pick out the juicy trades, looking only at the right edge?" Well, you're always looking at context. And you're always looking at the probability of the signal. So in other words, like right now, the market's sideways. right? There's no question the market is sideways. We're here in the hawk. Well, it actually moved a little bit lower. We did get a decent sell signal here. But for the most part, the market doesn't have very much direction to it. Not yet, anyway. So I guess what I'm saying is if the market has a clear context, I'm definitely going to stick with that direction, whether it be up or down. And that context can change during the day. After that, I'm going to be focusing on the high probability signals. I'm going to be following, things like tests of the extreme, the market structure itself, and then see how the signal develops out of that. So I'm going to be looking, like on the hawk, I'm going to be looking at first macro crosses. I'm going to be looking at macro pullbacks. On the Falcon, I'm going to be looking at trend change signals, late filter entries. The Eagle, I'm going to be looking at red bar buys, green bar sells, trend change signals. And on the Raptor, same thing. I'm going to be looking for trend change signals. I'm going to be looking for cloud crossovers. I'm going to be looking for soft edge buys and sells. After that, I'm going to take great pains to manage my risk. I'm not going to risk more than I can afford to lose. And I'm going to, in most cases, try to keep my stop back as far as I can, especially, again, given the context of the market. So I don't think it's so much a matter of picking the juicy trades, Tony, because every single trade, it's a 50-50 probability, right? It's either going to work out or it's not. You're either going to make money or you're going to lose some money. So if you lose some money, don't lose more than you can afford to lose. And when you combine all those things together, then things start to work in your favor. I suppose the last tidbit I can give you is that you want to limit how many times you trade through the day. It's a lot easier trading when you're only looking for 3 good trades a day. You don't feel rushed. When the market's uncommitted, okay, so I got to sit here and I got to watch the bars tick by. But, it's not like I'm trying to be like Paul Rotter and get in and out of the market 300 times a day. I can't do that. And I think when you're starting out, I think it's to your advantage to trade less. Not only are you going to be a little bit more selective about your trades, but you're also going to incur lower commissions, fewer exchange fees, and so on. All right, so I didn't get a chance to elaborate on this trade, but when we got this swing here and the market started heading lower, this is usually the time when I start to roll my stops in a little bit tighter because we're kind of in a trading range here, and of course we're expecting a bounce. So you saw the market come back, peeled against me, hit my profit objective, so you saw the trade manager close out the account or close out the trade. And again, it just totally automates your trading and never allows you to risk more than you can afford to lose. It quite literally is the best of both worlds as far as trading goes. TCAT asked, do you have any users trading with World Cup advisors or Top Step traders? Yes. There's at least a couple of guys. I know Ray Burke was with Top Step for a while. And I'm actually talking to Eddie at Top Step right now about starting trading combine. Jim says, regarding finding the juicy trades, market timing and having a strategy on what you want to do is a juicy trade. And yeah, I think that's a good way to put it too. Like you want to have your favorite trades ready, right? Like there's certain things you want to be looking for. Like here's the first micro macro cross signal again. We're going to be late on it, but we'll take this one right here. It's not the first micro macro cross, but whatever. And again, let's see, where's my stop strategy? Well, wind that back a little bit. Yeah, that'll work. So if we get filled here, we'll let the stop strategy manage our stops. There we go. I'm going to eliminate the break even and the profit objective just so that, you know, if we're going to test the top end of this trading range, this morning's trading range, I want to show you how the trade manager rolls our stops here. Because I think this is this is the best part of Trade Manager. People are always confused about, you know, how should I manage my trade? Well, the Trade Manager does it here for you. The market's a little slow this morning. Get up there. We'll give it a little nudge. There we go. So you see the Trade Manager starting to roll those stops up. And then if we start to get a little bit more open profit here, I'll probably change to a different strategy, maybe something like the parabolics. I like using parabolics when there's a little bit more open profit. And all you have to do is click accept, and now you're using parabolics. So it looks like we would have hit our break-even trigger, and if we close, there we go, we would have hit our profit objective on this trade. So a nice little scalp there. I'm going to see if we can't run it out a little bit. Probably not, because the market does seem a little bit sideways right now. Oh, maybe I spoke too soon. Might have caught a little bit of a break there. Trend change signal here on the Falcon. And we also got a crossover signal here on the Raptor. See, our bands cross over. Market gains a little support from the band. Didn't drift into the band as much as we usually see, but still decent signal. The Eagle, not a clean signal. The band had twisted over. Technically, this is what we would refer to as a rule of three, but honestly, it's not as easy to take on the Eagle. It's not really a textbook rule of three. But that's why we have the different tools, right? Because the market environments change. Oh, and here we can see the hawk. The stops have been pulled up all the way here, given our parabolic strategy. And so we'll see now whether we ride out this little swing or if the market's going to give us a little tag. Yeah, absolutely. Mo says that was a classic micro macro pullback on the entry on the hawk. Absolutely, right here, Mo. Almost as good as money in the bank when you get one of those. So they're floundering here a little bit. I'm probably going to end up getting tapped here on the trailing stop. But you can see how the trade manager just manages all this for you. And best of all, like I said, you're never ever risking more than you can afford to lose. So you're always correctly capitalized on your trades. Very important. Oh, we might be able to ride out this swing after all. The buyers have shown up. There we go. Who's your daddy? Get going. All right, so we wrote out one of the swings. Nice thing I like about the parabolics is that the stops tend to stay away until the trend actually picks up a little bit of momentum. But like I said, there's 16 different strategies here for you to choose from. Everything from a fixed tick to percentage stops, a whole slew of moving average stops. If you want something very aggressive, we've got the bar high-low strategy, which keeps you in the trade until the first sign of weakness. Actually, let's go to the bar high-low now, if it gives me a chance. Oops, there we go. So the bar high-low, like I say, ultra aggressive, and it takes you out at the very first sign of weakness. So if you really want to keep a tight stop on a trade that's progressing, there's one for you as well. All right, so nice little run up there on the hawk. All right, you guys, excuse me just for a moment. I'm going to be right back. Hi, sorry about that. What did I miss? It doesn't look like anything. Oh, we are getting a macro pullback signal here on the hawk. I wonder if this is going to end up drifting into the hard edge. Hard edge, I mean down here by the eagle. Trade forecaster. This is another system add-on, meaning that you can use it on any chart, you know, time-based chart, a tick chart. It does not have to be a DTS chart. Trade forecaster says we're currently in trend mode, swing mode up in about 10 minutes. So you can kind of see that trend mode kind of dying down a little bit, and perhaps the market going to be a little choppier after this. Nice little macro pullback signal here. I was going to point that out on the hawk. Macro pullback signal, pretty easy to identify. It everything stays in sync except the micro line. Micro line changes color, but everything else in this case stays green, and that is what is called a macro pullback signal, also a high probability signal. And you can see no trouble there hitting our scalp target, and actually gave us the opportunity to perhaps take a couple of contracts on that one. All right, well, we're just kind of waiting them out here a little bit. Looking at gold, here's gold on the Eagle. And Jose, I think you said you're long, so it's looking like the Eagle is confirming what you're looking at. So this is a hard edge bounce. We're just producing a regular with trend buy signal. We had a nice little hard edge bounce signal back here. But now that we've emerged from this trading range, remember how I told you we want to see a retest? Well, that's what we got right here. We've gotten the retest, and it looks as though gold is going to try to press a little bit higher. I can see 12.15 being a probable target. We're kind of stretching it a little bit here, getting to 12.16. Oops, wrong tool. I was looking for my support and resistance lines. I happen to have those on the Hawk or the Falcon. So we took a nice little bounce here off of the secondary resistance. Yeah, see, 12.15, next probable resistance zone. So I may have to adjust my profit objective a little bit if that one actually does break out and continue higher. Oh, there you go. It did break out and it's continuing higher. All right, well, don't have much else going on, so we'll just kind of hang with this one for a little bit. I may initiate my break-even trigger around 12.14. Looks like they slipped us a couple of ticks on the fill. And now we're kind of testing this top end. You'll probably notice that the width of these bars change, and this is the dynamic equivolume bars from Indicator Warehouse. And what the dynamic equivolume bars do is they incorporate volume into the bar itself. So these wider bars show you that there's a lot more volume going on there than these thin bars. And the wide bars always occur when the market turns. So see, the market came up, a lot of volume here, so obviously a lot of sellers. Market came down, buyers supported it. Market goes up, more buying support, but the sellers not looking so strong at this point. What's going on? Are the sellers not going to jump back on board here? If that's the case, we can probably anticipate the buyers to continue to push and maybe, hopefully, push the market a little higher still. So there's a little trend line. You see it's pretty much going to sync up with the hard edge on the trading band. Come on, get up there. Give them a little push. There you go. Come on. Trade Forecaster says we should be in trend mode for about an hour here on the gold market. All right, well, we're going to put that on the shelf for now. Let that do its thing. We've got our stops enabled. And if it gets ahead a little bit, I've got the break-even target. Oh, Jose's Looking for it to trade all the way to 1245.81. That's a big move. Not sure you're going to see 1245 today, but gold is insanely strong. I don't blame you one bit for looking for an opportunity to buy in. If you haven't looked at a daily gold chart, let me build you one here. This is one of these charts that it's going to show up in a textbook someplace. It's crazy. Good. Jose's got his break even at 1215.90. Good for you. All right, so here's gold on a daily chart. Isn't that just the most perfect rounded bottom you've ever seen on a chart? And you know, I was trying to buy gold down here and I got tagged on this reversal. I was so mad because, of course, after that, the market just boom, took off like a shot, and I was watching something else and didn't get back into the trade. But yeah, this one's definitely going to show up in a textbook somewhere. So gold made this insane rally, topped out, fell sharply yesterday, but the rally is far from over. So Jose, I think you've got the right idea here. Just look to buy in and keep on going, because it is very likely we are 1245. That's where your target was. Seems very probable. You might be looking at that little bit of a gap in there, maybe. No, I think it's a good trade. I think it definitely shows promise. All right, speaking of promising looking trades, we had a couple macro pullbacks here on the Hawk. Nice late filter entry signal here on the Falcon. Let me show you this. Late filter entry signal occurs when your filter goes out of sync, comes back into sync. Trend line never changes color. Very important. You generate a buy signal. And away we go. The market kind of taking its time. You know, not quite the volatility that we saw last week, but that's all right. They're still plodding along. Mo asks, Eric, I see on your Hawk chart the green warning dots are lighter green than mine are. Can you change the color for them? Absolutely, Mo. It's pretty simple to do. You go here to your indicator panel. There's not much that you can change on the DTS tools, but the colors you can change. So you go down here to where it says plots and where it says buy alert, just click on the color. I think yours might be green or forest green or something like that. And you can change your color there. So that's for your buy alert. You'll do the same for your entry and your warning dot. And you can change your red ones too if you like. Actually, that reminds me, I'm going to change them here on the Raptor. Because it's a little bit too dark with a black background. So maybe lawn green. That sounds nice. Remind me of summer. We'll see how that looks. Oh, much better. I'm liking that. And then when you have things the way you want them, save the template. So go template, save as, and I just call mine my Raptor, or Raptor, I guess. And now when you load up your Raptor chart, you can just put that on there and you don't need to worry about it. So when you build a new chart, or whatever it is, Raptor or Hawk or whatever, you'll have all your preferences. All right. So I just threw that on my other Raptor charts. And you can do that for all your tools, right? If you want to change your warning dots, put them a different color to make them a little bit more obvious. Okay, it looks like the NQ a little bit on an uptick. Okay, I was just checking the settings on my Geiger counter. Crude inventory. No, not today. This is a short week this week. So crude inventory on Thursday this week. I was going to say we can go over to the crude oil market and set up for crude inventory. Okay, let's see what's going, speaking of crude, let's see what's going on in crude oil. And, well, let's start here with the Eagle. They're trying to press higher, so crude, a little bit of a funny day yesterday. Where did we go? Here we go. So here was, no, sorry, I got the wrong day. Here we go. Crude made a run up and then a pretty quick reversal yesterday. And then here we are again with the run up in the overnight. And it looks as though the market's trying to hold on to that support. But we are more or less range bound here. We're getting a buy signal on crude here on the Eagle. And I'm a little reluctant. Well, we can buy it, but we should anticipate the market's going to give us some grief up here as it gets toward the top end of this trading range. Because it doesn't look like much, at least not on the Eagle here, but this is the trading range that we're kind of stuck in today on crude oil. So long as it's range bound, as it gets higher, the sellers are going to get more aggressive. They're going to try to short it. And as it gets lower, of course, the buyers are going to get more aggressive and try to buy it. So same thing. Sometimes the best thing to do is just wait for the market to get outside of that range. Get outside of that range, show me the signal. All right, Well, we'll put that one back on the shelf for now. All right. So a nice little run up there on the NQ right now. And it's good to see the market bullish again. You know, it had its little retrace a little while ago, and here they are trying to send the market higher. Still got my eye on crude oil there. You see the Falcon, should show you the Falcon. See how this is starting to turn into a wave like a roller coaster? That's also indicative that the trend is maybe not as strong. We are working on a possible trend change signal here to the upside. Not getting too crazy about buying it just yet. Actually getting a double dot reversal. If you want it to be ultra aggressive on it, sure, here. We got nothing going on. I'll show you the double dot reversal. Now this is a counter trend move, the double dot. I'm going to wait for the signal to print. All right. The double dot occurs when a trend is about to reverse. See here? Double dot. Now you don't just blindly buy and sell double dots. You need some structure with it. See, we have lots of double dots here, but the market did not reverse. It ended up reversing from up here. What you want to do if you're going to do a double dot trade is you want to be able to tie this resistance in with something in the history of the chart so that you can say, oh, the last time the market was up here, it made a rather dramatic move lower. So prices are back up here, you flash a double dot, you can anticipate that the market's going to head lower again. Well, it's a trading room. I can show you these things. We've got this little reaction right here, right? This is not a high probability signal, folks. This is not a trade I would recommend you follow me in on, but it's a chance to show you the counter trend move. So this is the reaction. Last time prices came up here, this is how they reacted. They traded back down here. Will they do it again? Well, maybe. The nice thing about the double dot signal is that I can keep my stops relatively tight, right? I got my stops here above the high. I'm only trading a single contract, so the risk exposure is not huge. And I will know without a shadow of a doubt when I am wrong. If prices trade back through these highs, well then I'm definitely wrong about the trade and I should take my stop out. I don't normally show you counter trend trades, especially for this reason, because they are lower probability signals. But we have nothing else going on here at the moment, so why don't we try the fixed tick strategy? So we're gonna, let's see, where is 10 ticks? Oh, 10 ticks right there. So we're gonna trail 10 ticks off of the high. That's all we're gonna give this market is 10 ticks. And I can change it, you know, if I want to give it more or less. A little bit slow right now, though. Haven't had too many high-quality trades this morning. We've had a couple, but nothing to get too terribly excited about. All right, so here come the buyers. We'll see whether the sellers step up and push them down. If they do push them down again from here, if this bar forms lower, we'll probably see the sellers start to press the market, and I'll in turn probably get more aggressive with my stop. There we go. Come on. Come on down. Come on. So the buyers coming up here a little bit. You see this bar had a little bit more width to it, so I know there's a little bit more volume associated with it. Likewise, this bar here had some volume with it, as did this one here. So I know there's some active selling going on. We do need to see the market trade down below this low here, this 29.75. We need to see somebody take 29.74. Pretty please. It's very quiet for a market like crude oil. Come on, crude. No, wrong way. Oh, all right. Okay, so, you know, it was a counter trend move. Like I said, we don't point it out very often. Here's the downside always of taking a counter trend signal also is it prevents you from taking the trend signal, right? Here is that trend change signal to the upside, which we couldn't take because I was already short. All right, well, let's see if we get something going on here. Everybody's just kind of sideways. We halfway expected that this week. The NQ still on a move higher. Well, that's good. That's good. That's no doubt in part with the crude oil move. We should have another opportunity here to get into a trade shortly. But now that they've kind of made their move higher, our best course of action is to wait for this macro pullback, maybe a hard edge bounce, maybe a bit of a retracement here on the Raptor. These are the kinds of things, if you're going to wait for those best setups, those are the kinds of things that you just have to wait for, I'm afraid. And today is a little bit slower than usual. Go figure. I'm just going to check the website and see, are we in for a report today? Why are they dragging their heels? Oh, FOMC minutes. Oh, that would explain it. Top of the hour. Well, it's the market's kind of favoring a bullish, some bullish news, obviously. All right. Well, that's kind of going to put the wrinkle in the rest of the session, seeing how we're only a little ways away from that report. Don't anticipate that they're going to get too crazy. Oh, yeah. Sorry, Ryman. Ryman says the meeting is out at, the minutes are out at 2 p.m. Yes, of course. Sorry, my mistake. Well, folks, we've got a macro pullback brewing here, but pullback into the hard edge seems very probable. But I'm going to show it to you anyhow. So here's the macro pullback signal. We have the warning dot. The signal hasn't printed yet. There's the signal. I'm going to try to risk it a little bit deeper just in case we get a more pronounced pullback, which, as I said, does seem likely. And they slipped us a tick on the entry also. Stinkers. Come on, get up there. So we took a little slip on the entry here. Our break even and our profit objective are both at the same level, which is right at these highs. So we really need to see the buyers press through the highs. Normally, I'm not a fan of buying near the top end of a trading range, especially for this reason. But we have nothing else going on that I can show you, so here we go. Nicely done, Tony. Tony says he just covered his first mini crude oil trade. Took a long time for me. Went long at about 9:40 Eastern. Wow. Yeah, you were holding that for about an hour. Crude is a little bit sluggish today also. Everybody seems to be. I don't know if we can blame the report for that, the pending report, or what's causing the market to dig in, but they are dragging their feet, no question. Well, we'll let this trade play out. Folks, if you have any questions, please feel free to ask them. Otherwise, I think we're going to close up the trading room here in a little bit. There really is not much going on right now. The NQ definitely bullish. I would be looking for opportunities to buy on pullbacks. But at the moment, there we go. Come on, get up there. Oh, sure, Tony. Tony's got a question here about the hollow bars on the Eagle. He says his are not painting hollow. What you want to do, Tony, is go here to your indicators, find your Eagle, and then when you pull down here to the very bottom, you're going to have a setting for hollow bars. Yours probably says false. So set that to true. Excuse me, apply it or just click OK, and you should have hollow bars. Oh, Tony says his says true, but they're not hollow. In that case, you're going to have to shoot an email over to Ben. Do a little screenshot, and here I'll show you how you do that. You do a save image as, and send your email to Ben, support@indicatorwarehouse.com. And he'll get you all fixed up. All right, you guys, I think we're going to wrap things up here today. Like I said, the market's just going to drift. There's not going to be a whole lot going on. Thank you for your attendance, though. If this is your first time to our open house, I hope you'll consider coming back. Normally, Wednesdays are a little bit more active than this, but oh well, what can you do, right? You can only take what the market is giving you. DTS owners, I have a treat for you tomorrow. In our trading room tomorrow, I'm going to take the time to answer a question emailed to me last night by Todd. Todd couldn't attend today, so rather than have to write a novel answering his question, I'm going to answer it in the room. But it's the big question, how do you find the balance between finding your stop loss order and your profit target? What do you do? If you're running a tight profit target and a big stop and you get stopped out on a reversal, well, you could have stopped yourself out of several good trades. So I'm going to give you the solution to that little dilemma tomorrow in the trading room. All right. And so we'll see you guys bright and early. And again, thank you for your attendance today and hope to see you guys again next week. DTS owners, bright and early tomorrow morning. Bye for now.